where you get to know the right kind of investment strategies for you for all kind of financial goals. I'm Kavita Thapliyal, and on this show today we'll be focusing not only on investment strategies, investment instrument, but also your life financial planning. So just in case you want to send across your portfolio details or anything about insurance that you want help from our experts for, or anything about aligning your loan strategies with your financial goals or investments, just send across your queries on our WhatsApp number and email ID, and we will have it answered by our experts live on the show. And today as well, we'll be focusing on your portfolio queries, and along with that, we'll be talking about various investment strategies which might be right for your goal-specific needs. And to answer all of your questions today, I have with me Kaustubh Belapurkar, Director, Fund Research, Morningstar Investment Advisor, India. Kaustubh, hi, good evening, and welcome to the Money Show. And once again, we'll be diving deep into various investment instruments and the right kind of strategies for our viewers. So let's begin, and let's take Aruni's question first. Kaustubh, I hope you have the question on you. So she says that after retirement, she has some corpus, about 60 lakhs after investing in Senior Citizen Savings Scheme and Pradhan Mantri Vay Vandana Yojana. And she wants to invest in mutual fund through SIP route or lump sum mode. And so that ways, if it's the SIP mode which is being recommended, what should be her period of investment? And she wants to, and should she be investing her entire corpus in mutual funds? That is also one of her questions. I really wish I had Aruni on the phone line, because she being retired, I want to understand the purpose or the goal with which this investment is aligned, and for how many years she wants to stay invested. An STP route is something I guess she wants to know about, parking the money in equity markets through STP, and that can be staggered. So yeah, Kaustubh, we don't have a lot of details, but so far 60 lakhs to be invested in the markets, and she's retired, so I'm not sure about her risk appetite as well. Assuming she's a moderate risk taker or maybe slightly conservative, and I hope the time duration is more than 5 years, what kind of recommendation or strategies would you recommend?
Sure. Kavita, so I think, like you said, maybe some of the details are missing, but, let's talk through some of the elements of, Aruni's requirement and portfolio, right? So obviously she's got money already invested in the Senior Citizen Savings Scheme and the PM VVY Yojana sort of scheme. So that's great, because, from a, monthly income perspective, in terms of the interest rates, obviously it's pretty attractive. And assuming if she's got the maximum amount invested in both of these, she could get, close to about 25,000, 30,000 monthly income streams in a sense from that. I mean, if you do the math there, which is great, but I don't know if that's enough for her so the first question that she needs to think about, while we don't know the details, but, that does she also need the mutual fund portfolio to augment the monthly income that is being generated from some of these government schemes, right? So that's the first question that she needs to ponder over. And that will also then kind of decide how the allocation would look like for her portfolio. Potentially the other thought is also, what is her time horizon? But let's maybe make some assumptions that, okay, yes, she's a retiree, so probably a little more risk conscious, risk aware, doesn't want to take on too much risk, wants a little bit of a steady stream of income, but perhaps still has, maybe a 7 to 10 year horizon with the portfolio. So a couple of things that, she can think about is, obviously, if she's got this, monthly income coming in and she wants to augment that, she can probably go with like a balanced portfolio between equity and debt. Maybe even a 50-50 portfolio where the debt portion can augment the monthly income that's coming in. And the remaining 50% in equities, we will go for low risk options in sense of more large cap, flexi cap strategies, probably avoiding the mid and small cap space, because obviously, like we know, you need a longer time horizon of at least 7 to 10 years, that larger risk taking appetite, which typically, retirees who need some cash flows will tend to not want to do that. So I think that's some of the underpinnings of the way she should be thinking about her portfolio. And that's how I would like her to think about building the portfolio. In terms of the other question, that should she take a lump sum investment or a SIP route, I think clearly for the fixed income portion of her investing, she can go and invest in one shot, no problem. There's no timing risk. But with the equity portion, given obviously we all know that markets are volatile, They have again been trending upwards in the past, few months. It will be a wise decision to at least set up a 6-month SIP so that you avoid that point risk of entry in the funds. And like I said, you know, you can go for large cap index funds. You can take a couple of flexi cap funds like HDFC flexi cap or Kotak flexi cap. Great options for her to start investing. But yeah, maybe a 50-50 portfolio, as long as she's got at least a 7-year horizon and doesn't need cash out of the entire portfolio, to start with.
Retirement, since we are talking about annuity or pensions or that money in terms of monthly expenses, etc., getting from your investment portfolio, how can one go about it? Because in Aruni's case also, so far she's been investing in senior citizen savings scheme. She's also investing in Pradhan Mantri Vay Bandhana Yojana. Great schemes, for retired individual to put their money in. But then at what stage you should be parking money in equity? Should you be doing this before parking money in these kind of conservative schemes, or like how Aruni is doing? She's collected a corpus over there, she's accumulated that amount, and now she's putting that money in equity or maybe preferring mutual funds. What's the right kind of approach, and what should be considered when?
Yeah. Great question, Kavita. So, when you think about it, so obviously if someone who started very early and built up a sizable corpus, it becomes a little bit of an easier journey for them because they have a great amount of money at retirement where they can then, potentially look at that, look, I will only earmark a certain amount for my monthly expenses to start with. And traditionally, if you think about the math, if you keep between 3 to 4 on perhaps maximum 5 years expenses in like a fixed income strategy, which will fund your next 5 years monthly expenses with all the buffers built in. And the remaining portion, so let's just assume that an investor had say 5 crores and their 5-year expenses adjusted for inflation is perhaps maybe 70-80 lakhs, right? So only that amount can go into a fixed income fund, and the remaining 4.2, 4.3 CR can actually be put into equity instruments, because you don't want to be parking everything into a safe instrument only because you want to protect the portfolio. You want to be prudent about obviously having enough money available for your living and a comfortable living. But the remaining portfolio can actually grow quite significantly if you put into a long-term asset class like equities, right? Obviously, you don't want to do it for the short term, but if you have 5+ more year horizon, you can definitely get into more large cap, flexi cap sort of strategies. So I think that is a great way of doing it. But every individual has to do that math, obviously adjust for inflation, think about what your current expenses are, what they will project to be during retirement, and at least keep, I would say, as a safe zone, 5 years of expenses in fixed income. The remaining can easily be swept into equity and slowly keep drawing money from there as to replenish your expense pool. So I think of it like it's 2 individual buckets. That works brilliantly if you've started investing early and you've built a sizable corpus. The challenge obviously comes for people who have probably been more conservative or late to investing and haven't built a corpus. So either they have to delay their retirement, or they have to think of slightly safer schemes where your portfolio is not going to grow as much, right? I mean, you will probably start dipping into your portfolio. You can still potentially have a little bit of equity risk appetite, but very, very limited, because you will be dependent on your portfolio's value to draw money out on a monthly basis. You want to protect it from volatility, and largely it will still be allocated towards a fixed income portfolios. Some of the sort of rules that I would think about when we're constructing retirement portfolios.
All right, so we can have a longer discussion on this, but then we have limited time and we have to accommodate other viewer queries also. So yeah, as you were talking about Nakul's question, Kaustubh, he says that he's a senior citizen from Bangalore and he has a health insurance policy from ICICI Lombard. He says the company has allotted an agent who is not adding any value and has not contacted him in 5 years. So he wants to consider porting his policy to some other life insurance, to some other insurance company. Now he's senior citizen. I really don't know what kind of policy is this and if porting will really help, because beyond a certain age, and especially when you've reached that criteria or category of senior citizen, it's not policies are not available for you. Insurance coverage is not easily available. There are selected insurance companies who would want to give you that coverage. So But he's also talking about, can I put to a corporate plan or to a good agent? So what kind of a corporate plan could this be? And also, what would you advise when it comes to porting at this particular age?
Yeah, I would think porting is probably not the best route because we don't know how the semantics will work in terms of his insurance premium or coverage of existing illnesses. I mean that can be a challenge, and I think he's called that out that he has some pre-existing illnesses. So that's something that obviously might not be the best route to do. But I think there are companies and agencies that also help you with your claims process. I mean there are a lot of in fact startups that are also doing that. And that's perhaps he can figure out with his current insurance company that will help him do it. I mean, I'm not sure what value he's expecting the agent to add because honestly, in a health insurance policy, ideally, I mean the intervention comes in when you actually need it. So maybe he's worried that he will not get the help when the need for claiming the insurance arises. But even hospital desks tend to have good tie-ups, in terms of the desk helping you with the insurance claims process when it comes. So I don't think you should be overly worried and start looking out for porting. But yes, there are startups and agencies that help you, with the insurance claim process. But he will need to figure out with his current health insurance policy provider if he can move that policy within the agency code to the new sort of agency which will help him do the claims process. But I don't think you should be overtly worried about the fact that no one has reached out because there's no regular interaction that will have happen from a health insurance unless you actually need the claiming of insurance.
In association with SBI, बेस्ट है सबको पता है.
Small cap 3000 SIP, Motilal Oswal mid cap again 3000, HDFC flexi cap, ICICI Bharat 22 large cap again 3000, and Nippon India multi cap again 3000. So he is doing this SIP, I don't know for how many years, but then current value is 63,000. Okay, so how are the funds? And we're assuming again the investment horizon is 5+ years.
So I think, again, standalone, the funds are reasonably good. I have a couple of comments on that, but let me talk about maybe the overarching allocation again, right, which we've traditionally seen fairly significant allocation towards mid and small caps. And I think, again, Sushil should probably dial that down a bit. Because currently, if I look at it, it's almost close to 48% in mid and small caps through the underlying holdings of his portfolio. And he should perhaps look to, if he has at least a 10-year horizon, and that's my assumption, he should bring it down to perhaps between 35 to 40%, which is still a very aggressive allocation. But 10 plus years, perhaps he can live with that volatility, right? So that's one thing he can definitely look to do. Perhaps just add on, because the other thing that it's important to talk about that currently he's got this 15,000 rupees cumulative SIP. He needs to step it up. So I think during the step ups, he should focus on stepping it up in some of the flexi cap or the large cap SIPs that he already has. That's on the overall portfolio allocation perspective. Just one broad comment on the funds that he holds. So I think largely very good. I mean he's got a small cap, mid cap, the HDFC flexi cap. That's great. I think just on the ICICI Bharat 22 large kind of fund. Now obviously the fund's done well. It is predominantly it's got a large PSU exposure, and that's a segment of the market that's done really well. But I think it's not very, very broad-based in that sense. I mean, just given the way some of the PSU companies are. And I would recommend him to probably switch to just the ICICI large cap, the regular, which is the more diversified equity fund, instead of holding the Bharat 22. It does become a little more narrower in that sense. And having 20% of your portfolio and which is largely towards PSU stocks might not be the most ideal scenario. So I think he can make a switch to the ICICI large cap fund, again, a very well managed strategy. And that would then take care of both his fund holdings. And like I said, during his step ups, he can, add to more the flexi cap or the large cap to bring down his overall allocation towards mid and small caps. So I think these are a few tweaks that he needs to make. I already spoke about step ups. That's very, very important. 10% bare minimum. If he can do it more aggressively, great. And that's the way that he can kind of build a reasonable corpus.
Okay. Kaustubh, let's take Raja's question. He says that he's 33 years old, started investing, have some knowledge on mutual funds, and he needs your help in aligning his goals. So for child education, 2 kids, twins, below 1 year, 1,500 rupees SIP daily in Nippon multi-cap fund for 18 years. And then again the same amount in Motilal Oswal multi-cap for 18 years. He needs advice for retirement planning for his wife, is 30 years right now and can do 50,000 a month SIP. And so he's looking at bigger AMCs as he wants her to handle her portfolio on her own, which is a very good thing. And okay, so he's also taking all the uncertain part of life also. So it's very good, Raja, that you want to empower your wife financially also, and you are asking for a portfolio so that she can manage her investments. But having said that, a lot of planning needs to be done by you first, and then you need to sit and maybe just educate her as to how to go about it. Kaustubh, how can he start? And I also want to understand 1,500 rupees SIP daily. Is that a good approach, or he should be making it weekly or maybe once in a month kind of an amount? I don't know the income constraints over here or the kind of job profile or work profile we are talking about. Maybe that is the reason why he chose this particular SIP mode. But yeah, your take on daily SIP and yeah, retirement planning he's asked for his wife, and also his thought behind going for bigger AMCs. So by bigger, I don't know what he means. Is he talking about the AUM size, or then we just have what SBI, HDFC, ICICIs? He's talking about that kind of AMCs, or maybe he's talking about the AMCs who have the highest hit of good performing mutual funds. So yeah, that's for you to decode and help him strategize his portfolio.
Sure. So I think firstly, if I understand his requirement or his strategy correctly, I think it's a 1,500 rupee amount daily. So that's like, 45,000 rupees a month for each kid SIP. I mean, if you can fund that, great. Daily SIP is just, the best form of diversification that you can do as long as you can fund it. So I don't have potentially an issue with that. I think the funds that also he's chosen are fairly well managed. The only caveat that I would put when you use a single strategy fund approach, you need to be a little more, aware that the fund will have periods of great performance and underperformance depending on the market cycle. So perhaps you will see that, but since you're doing an SIP, it's not so much of a challenge. But don't get perturbed when the fund starts underperforming their peer group and trying to switch and all of that, because as of now, these are very well managed funds. Obviously, we don't know what the future holds in terms of, there could be fund manager changes, strategy changes. So those are a few things that Raja will need to keep an eye out for. I don't particularly mind the single fund approach. It's multi-cap, so a little more aggressive, but given that it's 18-year outlook, having a 50-50 allocation between mid and small caps, we can still live with. But he should keep an eye out, for changes to the strategy or the manager that may play out, right? That's one thing. I think the other thing that he very, very should be cognizant of, that you're starting with equity, all equity today. But remember, education is like a non-negotiable goal, right? You've started aggressively, you're putting a healthy sum of money. So I think it can really grow after an 18-year period. Obviously, he should step up. There's no doubt about that. But also what he should look to do is start reducing exposure, right? So, at a point of time, then if his portfolio is 100, start taking money out of equity and start allocating to fixed income for each of the Reuters goals, because you want to protect that capital as you come to the 18-year mark. The last thing you want is that, that 100 is grown up multifold, but it falls because the market is corrected around your goal time. So I think that's something Raja should definitely take care of when he's investing in both these, these SIPs, right? That's one. For his wife's, I can suggest a two-pronged approach, that he can do. One is start with, a good mix of large, mid, and small cap sort of strategies. Assuming there's a 25 to 30-year horizon for retirement, And I think again, I've suggested some funds that we particularly like on the flexi and the large cap and the mid and small cap side. Kotak flexi cap, ICICI large cap, HDFC mid cap, and SBI small cap. You can start with that kind of a mix. 70% going into the flexi and the large cap, and about 30 odd percent. So it's not overtly risky, but you're still getting a good element of, because it's a 25, 30-year horizon, right? That's one way of doing it. But if you want to keep it very, very simple, because it is for your wife who probably, and you want to de-risk from the fact that if you're not there tomorrow, how she'll manage the portfolio. Obviously, there's professional advice that you can take or she can take. But otherwise, even a Nifty 500 index fund is actually a great way of building your wealth over a period of time, and kind of an autopilot mode, right? Which you can work with, which you can do. The other thing which is there, which we spoke about, for instance, the daughter's goals of bringing down the equity allocation as you come to your goal. The same thing can be done for the wife. And in fact, the one thing I look forward to, which is there in SEBI's new recent consultation paper, is the target date funds that they've proposed, and perhaps and they might come to fruition in a few months, a few years time as this goes live. I think that's a great way of also planning for retirement, because then you don't have to do anything in the portfolio. The fund manager will automatically, as it comes close to the target date, start reducing equity exposure and bringing it down to and investing in fixed income. So that's another approach that you can consider. That product doesn't exist today, but perhaps years down the line when it does, you can evaluate that for your wife's retirement portfolio.
All right, we do have more queries, but then I think it's time up on the show. Thank you so much, Kaustubh, for taking time out and helping our viewers with their financial portfolio queries today. Thanks.
My pleasure. Thank you.
On that note, it's time to sign off, but I'm going to leave you with our WhatsApp number and email ID where you can send across your questions, investments or insurance. We have your back, and our experts will guide you right in the entire process of your financial planning and financial future. Thank you so much for watching. Goodbye.
Hi.
सरप्राइज
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 मार्केट भी ऐसे ही अच्छे बुरे सरप्राइजेस देता है ना। बैलेंस्ड